Hi, Shae Russell here, editor of the Daily Reckoning Australia. And today I thought we'd talk about the Aussie dollar. Now, the Aussie dollar, as I speak, is sitting at around 68.5 cents, which it isn't the end of the world. It's actually generally a pretty reasonable amount for the Aussie dollar, given where the Aussie economy is. However, I'm going to go out on a limb here and say that I actually think the Aussie dollar is going to fall further, not just a little bit into the 60s, but I think we could be looking at an Aussie dollar sitting as low as 50 cents by this time next year. Now, why do I say that? First of all, one thing I want you to know is the Aussie dollar tends to track the performance of commodities. So when you see the iron ore price rising highly, because we export so much of it, the Aussie dollar tends to rise quite rapidly, and it follows the iron ore price higher. So the iron ore price is currently trading at around $100 per ton, and that's, in all honesty, helping keep the Aussie dollar from falling further. So the Aussie dollar definitely tracks the value of commodities. The problem is the Aussie dollar is actually supported by interest rates decision by the Reserve Bank of Australia. And what happens is when interest rates go up, the value of the Aussie dollar tends to go up as well. It basically becomes a slightly stronger currency. So when you've got a high interest rate and a high commodity price, you're going to see the Aussie dollar be quite a strong currency compared to international players. The problem is we currently live in an economy where the RBA is going to cut rates. Right now the tip is June. I was personally angling for July, but apparently a June rate cut is in the bag, and it could also have another rate cut as later on in the year. Now these rate cuts, whether it's one or whether it's two or whether it's even a third one next year, are going to reduce the value of the Aussie dollar significantly. How much, we can't actually, it's really hard to put an exact price figure on it, but with every rate cut, I wouldn't be surprised if the Aussie dollar fell a few cents at a time. Whether the Aussie dollar falls immediately on the back of a June or a July rate cut, it doesn't really matter, because the markets tend to factor the rate decisions in the lead up to him. The problem is it's the long-term implications from this. And the long-term implications from low interest rates suggest a weak economy, and the Aussie dollar is going to reflect that. So not only are we lucky enough that the iron ore price is keeping the Aussie dollar around its current 68 cent mark for now, however, I actually don't think it's going to last, and I honestly think we could be looking at, as I said, the Aussie dollar as low as 50 cents by this time next year, and the more rate cuts, the deeper the rate cuts are, the lower that Aussie dollar is going to fall. That's all from me this week. I'll be back next week with more. Thanks for watching. Make sure you subscribe to our YouTube channel for more video updates. Plus, right now, you can get a free guide to investing in gold. It's called The Best Way to Buy, Sell and Store Gold in Australia. You'll learn how to decide on what type of gold to buy, which Australian gold dealers to trust, whether you should buy bullion or ETFs, and the best and cheapest way to store your gold. All you need to do to get your copy is to click the link in the description below or go to thedailyreckoning.com.au/gold.